Are you looking at getting into crypto trading? Well, in this video, I'm going to be taking you through all the basics you need to know before you get started, some common mistakes to avoid, and some helpful tips to help you achieve profitable trades like this one on the screen. So let's get into it. So first things first, let's talk about the differences between trading and investing. So with investing, you're going to be holding the underlying asset as spot, whereas with trading, particularly futures trading on leverage, you're going to be using contracts that are provided by the exchange that you're using, which means that you're borrowing money from the exchange to try and increase the amount of trading power that you are operating with. Now, that means that you are going to have what's known as a liquidation price, which means that if price hits that price, then your entire position is going to be liquidated and you're going to lose the amount of money that you've placed on that trade. However, of course, you can use something called a stop loss, which is going to prevent that and minimize the amount of losses that you incur. But the danger is still there that you can be liquidated with one volatile price move. That isn't to say that spot is completely safe. Of course, you can have your investments go to zero, but it's obviously much safer. The other big difference between investing and trading is the length of time you're going to be holding a position. Now, with investing, you're typically going to be holding that asset for months to maybe years, whereas with trading, you're going to be much more active, much more in and out, particularly if you're leverage trading. So there's typically three categories of trader that you're likely to fall into. There's positional, swing, and scalping. So positional, you're going to be in that trade for maybe weeks to potentially a couple of months. Swing trading, you're going to be in that position for days to weeks, and scalping, you're going to be in and out of positions within the same day. Now, those aren't hard and fast. You're going to find your own style, and that is going to be dictated by your own lifestyle and what suits you best. Now, we go into much more detail about this stuff in our how to build a trading strategy video, which I'll link at the end. But for now, let's go over what you're going to need to get started with trading. So obviously the first thing you're going to need is an account with a trading exchange. So at the moment at Learning Crypto, we're using Bitunix, really nice, easy user interface. You can either use it via app or on desktop. It's UK friendly. And also if you use our link in the description below, you can get a nice little welcome bonus as well as a discount on fees. So go check them out. Second of all, what you're going to need is an account with TradingView. Now, a basic account with TradingView is free, and it's pretty much all you need to get started. There are levels of membership where you can pay for extra things like more information or more indicators on your charts, etc. But a basic account is all you really need to get started. So get that sorted. And then third of all, what you're going to need is obviously a trading strategy. Now, as I said before, we have an entire video dedicated to teaching you how to create your own trading strategy. So go check that out. But in the meantime, I'm going to go through what my trading strategy is so you can get a feel for what that looks like. So my trading strategy is based on momentum, and the two main indicators I use are the moving average 21 and the RSI, as well as market structure as confluence. So here's a trade that we took on last week in the Traders Lounge in the Learning Crypto Premium. So if I just head to our Discord, this is what you get access to if you join our Learning Crypto Premium. So this is the trade that we entered back on the 3rd of April. As you can see, this is the entry conditions, and this was the live snapshot when we entered the trade. And these are all the TPs, etc. So if we head back to the chart, the reason I entered this trade, you can see that we broke below the moving average 21 back here on Saturday, the 29th of March, as well as losing this level of support at $623. And in doing so, we also went on to make a lower high. So we had these highs up here. We then broke down below that level of support, below the moving average 21, and then we made a lower high here where we rejected the moving average 21 on the 1st and 2nd of April. Not only that, but we broke below the RSI 50, as you can see, and came up and retested it as resistance. So below the moving average 21, below the RSI 50, lower high created. That looked to me like a short. So we got in on the bounce here at $601. And then as you can see, price broke down and we hit all three TPs. A nice exit down here at $530-ish. Bearing in mind the bottom of the move was 520. So captured the pretty much the entire move from when we entered almost down to the bottom. Very nice trade indeed. And as I say, if you want access to all of these trade setups and trading discussions, etc., head to our website, learningcrypto.co.uk, and you can join our premium membership. And as I say, you get access to the Discord, not only the trade setups, but all of the chats as well. And as you can see, we have our trade success room where we've got plenty of profitable traders in there. So if you want to join our trading community, head to our website, go check it out, and we look forward to seeing you in there. Now, just before you go ahead and fund that account and get started with your trading, let's go over a couple of common mistakes that you're going to want to avoid, as well as some tips to help you along the way. Now, as we talked about earlier, if you're trading leverage, then you are going to have a liquidation price, which you don't want to be hit. You do not want to be liquidated and lose everything you've placed on that trade. So you can use a stop loss to avoid that. Now, if we're using the most recent example that we talked about earlier of the trade we placed the other week, you can see that we had our stop loss placed up here at around $620. So our entry was around 601. Our stop loss was around 620, which meant that our stop loss was a 2.85% price move away from our entry. Now, obviously, multiply that by the leverage we used, which was a 25x. So we were looking at losing around 75 to 80% of the money that we placed on that trade, which is fine. Obviously, I say you don't want to get liquidated and use the entire lot. And in terms of the placement, we placed it just above the wicks of the most recent high, because that would have meant, in my opinion, that the trade idea was invalidated. And that's what you want to do. You want to try and place your stop loss not only in a place where it's going to ensure that you don't lose too much money, but also in a place where it makes sense structurally in terms of price structure, so that it's as close to your invalidation as possible. You want to give your trade as much breathing room as possible until it gets to a point where you've clearly got the idea wrong, and therefore it's going to take you out of the trade. So next up is only risking 1 to 2% of your account per trade. So again, we go over this in much more detail in the how to build a trading strategy. But as I say, if that stop loss would have hit on that trade, I would have only lost 1% of my trading account. So a very quick example, let's say you have a $1,000 account. You're going to place $100 on the trade, and then you're going to have a stop loss of around 10% of price movement. Now, again, you're going to have to adjust that depending on leverage, but essentially, if you've got a $1,000 account, you risk $100 per trade, and then out of that $100, you're only going to lose $10. Therefore, $10 is 1% of $1,000, and you're not going to blow up your account too quickly at all. Next, calculating a sensible risk reward. So again, let's go back to the example we used on BNB. As I say, our stop loss was up here at around just shy of 3%, but our take profit, or the furthest take profit, our TP3, was around a 12% price move to the downside. So you're looking, as you can see on the screen there, the risk reward ratio, as you can see just there, was around a 4 to 1. So that's what you're going to want to calculate when you're entering trades. You want to have a nice risk reward of at least 2 to 1 really, and then go from there, because that's going to help build up your account. What you don't want to have is like a 1 to 1 or less than, or a higher risk than a reward. That's all going to come down to your trading strategy, as I say. But around 2 to 1, anything higher than that, you're looking good, and that's how you steadily stack up the wins. It's about small steps rather than big home runs. And then lastly, make sure you are not revenge trading or over trading, particularly when you lose. So if you start going on a bit of a losing streak, don't try and trade your way out of it. Take a break, step back, reassess, and go again. And as I say, don't revenge trade. That's also going to come from not taking huge losses. So as I say, that's why it's very important to only risk 1 to 2% of your account, and to have those stop losses in place so that you don't take big losses, and then you don't try and revenge trade and try and make it all back in one trade and trade emotionally. Now on to some brighter topics, so tips to improve. So main one is to plan the trade and trade the plan. So stick to your trading strategy and avoid FOMO. Don't jump into trades just because something's pumping or dumping and try and ride the wave. Have a proper trading strategy where you have entry conditions that need to be met, and as we talked about, proper stop loss placement and a risk reward, so that you're trading properly and not just acting on emotion. So as I say, trade the plan and plan the trade. Next up, need to journal your trades so that you can go back over what went right, what went wrong, and you can constantly tinker and amend your trading strategy. Now that means just making small adjustments where you can see common mistakes repeating, as opposed to just completely throwing the trading strategy out and starting again. So if the trading strategy is working, but there's a couple of things that need changing, great, but you're only going to pick that up if you are journaling. And then finally, a little optional extra, integrate with other traders in a community setting. So as I say, with our Learning Crypto Premium, not only have we got the paid option, we've also got the free option as well. So you can jump in there, 1 month free, jump in, talk to other traders, talk about their strategies, what works for them, what doesn't, and bounce ideas off each other. It's a really great way to not only build confidence, but improve as a trader as well. So hopefully you enjoyed this video. Hopefully you got a lot out of it. Let us know in the comments below what stage you're at with trading. Are you just getting started, or have you been doing it for a while, looking for ways to improve? Let us know. And also don't forget to check out the videos we've got linked at the end of this video, including how to create your own trading strategy and an entire course on how to get started with trading as well, which goes into much more detail about the topics that we've covered in today's video. So hope you enjoyed. Don't forget to like and subscribe, and I'll see you on the next video.